Good morning and welcome to Market Fatafat right here on ET Now. Red on the screen, but what's on the mind of the market is a spat between the RBI and the government. We spoke to Rhythm Desai of Morgan Stanley and he said that he's hopeful that the spat will soon ease and that the issues concerning both the parties will be addressed. Let's listen in.
See, my view is that the very fact that this debate is happening in this country tells you that there's a lot of independence. Not too many countries can claim to have such a debate. It requires a very progressive economy to have such a debate where the central bank can stand up and say, I don't feel independent, and the government, will have its own responses, and there is a debate there, right? And the fact that there is a debate, it will get addressed. Whatever grievances are there on either side, I think will get fixed. I'll make a very fundamental point here, is that the case for independence for the RBI was made by Urjit Patel and Raghuram Rajan very forcefully to the Prime Minister, and the Prime Minister accepted that case, and therefore we had the creation of MPC, which is that the RBI highlighted how previous governors had come under pressure of previous finance ministers and were forced to make rate decisions that they were not totally comfortable with. So future governors have been ring-fenced by the creation of NPC, because you have 6 people there. It's a lot harder to to influence 6 people on a rate decision. I'm not saying it's impossible, but it's a lot harder. So it's a much superior framework with respect to independence. So when you have such a framework put in place, I dare say that the RBI is more independent today than it has been in the past. Can it be even more independent? I think that debate will be resolved. The fact that it's there in the media, the fact that it's there in the open suggests, I think that, we are actually a whole lot more progressive than we were ever.
There you have it, a view coming in saying that the issues need to be sorted out and fast. We'll have to see how the whole saga though pans out. For now, let's keep it with the management of Pidilite Industries. Revenues are up about 14%, profits a bit flat, while margins have contracted. Apurva Parekh is with us right now, the executive director of the company, to talk a little bit about the numbers. And it's been a bit of a mixed bag. Even after the double-digit volume growth, we're seeing a fall in your margins. So what really attributes to this fall?
The main reason for impact on the margin was increase in price of crude and depreciation of Indian rupee. Both of these factors resulted in increase in input cost. Hence, our gross margin contracted by about 380 basis points. This was the main reason why our profit growth was less than our sales growth.
Okay. Going forward, what is your plan to increase prices, and how do you plan to, look at the competitive pressures in the markets right now, sustain really at this point?
See, as a company, we have a lot of strength, including strong brands, strong distribution network, innovative products, and many other strengths in the market. And hence, anytime when there is a significant increase in input cost, and if we believe that increase in input cost is going to sustain, we do plan price increases, which we believe that we can pass over in medium to long run. So our focus is that if there is a significant increase in input cost, we do need to pass it on, and in the past we have been able to successfully pass it on. So we plan to do the same.
Can you also give us a sense as to what the finance cost outlook is, because it's doubled since the last year? What is the debt of the company right now?
The company has no debt, and hence if you see, the finance cost is very, very small, but company has no debt.
Okay, good to know. And what is the outlook going forward? What can you expect in terms of guidance for your top line and bottom line, as well as your margins?
See, as a company, we do not give out any guidance or outlook for our sales growth or the profit growth. However, as I said earlier, we as a company are very focused on achieving consistent, profitable, volume-led growth. So we are focused on, working on all the fundamentals and the initiatives which would allow us to achieve consistent sales growth with good profitability.
Wishing you all the very best. Thanks for joining in and giving us a sense of what has transpired in the quarter gone by. The stock a bit tempered. Well, let's get started then with Market Fatafat. Our team of research analysts all standing by, as well as Kunal Bothra and Gaurav Ratnapaki. And you know the drill. We try and squeeze in as many stocks as we can, stocks that you need to keep on your radar. Well, let's get started then by talking about Dr. Reddy's, and Pranay, take us through the news.
8 observations is a sentimental negative for the company. We don't know the nature as yet. But the thing is, Duvada plant currently accounts for less than 5% of its US revenues. Also, there aren't too many filings from that, and there is hope that if the nature of observations is rather serious, then the company will try to move some of these filings to other plants from where they can manufacture it, which is why you're seeing the stock recover from its lows today.
Okay, keep an eye out. That's a stock to watch out for in trade. A sentimental negative is the only way to describe it. Let's keep it with another pharma name then. And what exactly is the dose today for Aurobindo Pharma, Kunal?
Stock is nearing a breakout of a huge consolidation. I think it's spread across the last 2 months, if I'm not wrong, for Aurobindo Pharma. It used to take support around that 750, 740 kind of mark, and resistance at around 780. So this is the next or a retest of the resistance, but on slightly higher volumes, and that I think is a key focus for Aurobindo Pharma. If the stock breaks out of this consolidation, I would suggest a buy on the stock at current levels as well. Targets of 820, 840 on Aurobindo Pharma, and stop loss to be kept at 760.
Okay, keep an eye out. Those are important levels to watch out for. 820 on the upside. Meantime, Vivek, it's number 3 and it's another pharma stock. Take us through Fortis.
Well, that's right. We've covered one positive, one negative, and now again another positive to watch out for. Fortis Healthcare. So an important update coming here. The CCI Competition Commission of India has gone ahead and given the nod to IHH Healthcare to actually go ahead and take a majority stake in the company. The street is clearly cheering this particular move, and which is why looking at the stock up almost 5% in the session.
Oh yes, indeed. That's a stellar up move that we're seeing in the stock price today. Well, let's shift gears then, and all eyes on a whole host of numbers today. But among the lot, I'm a little bit biased, and I'm going to pick out a company that I track, and that is L&T. So let's watch out for this one. We're expecting the profits to come in at 1673 crore rupees, down about 0.5%. Your top line growth is seen higher by 12%, and that's largely going to be led by the infrastructure segment. Modest growth on the EBITDA front for the entity due to the low profitability of the Hyderabad Metro. An execution of 12% year-on-year will be driven by a higher order book, and we've seen several projects as well ramping up. The ENC segment, you're expecting about 11% growth. Of course, the guidance will be closely monitored. The FY19 order inflow and revenue guidance is maintained, and we'll be watching out for management commentary on the working capital, the order inflow, and of course, the guidance. Going into its numbers, L&T down 1%. Moving on then to Syndicate Bank, and Siddharth, tell us why are we watching out for this candidate?
Well, last 2-3 trading session, Awan, we are seeing high open interest activity. Even the price action is positive. Today, though, price might be slightly negative for Syndicate Bank. And why I'm saying slightly negative for a 2% correction? Because it's a 34 rupees stock, so you don't see, very less move. You generally see higher moves in terms of percentage. But then there is a sense of long accumulation which is taking place in Syndicate Bank. Very high volumes in cash market as well. If volumes were so high and it was selling, then stock probably should have gone down more than just 2%. So watch out for Syndicate Bank. It seems like it's poised for the upside.
All right, certainly poised for the upside. That's the take coming in on Syndicate Bank. Meantime, Kunal, I want to understand your view on HCL Technologies. Where exactly do you see the stock headed? I believe Gaurav isn't with us at the moment, right? So I'm taking it to Kunal. Kunal, what's your take on HCL Technologies?
So yeah, I think most of these IT stocks are doing extremely well today. Infosys, Mindtree, Tech Mahindra, 7% up odd. But even HCL Tech, which has been more or less like a laggard, I think it's showing signs of a breakout. Now on short-term patterns, there is a swing breakout which has already happened for HCL Tech in the last half an hour, 1020 odd levels. I believe it could be a good bet at current levels. 1060 could be a near-term target. Stop loss at around 1010.
All right, Kunal, thanks for that. A take coming in on HCL Technologies. Meantime, let's move on and Vivek talk about another set of numbers. What exactly has Prestige Estates delivered? What are they talking about in terms of guidance?
Well, the management didn't join us today, and if you're talking about Prestige Estates, actually if you're talking about this particular name, it's actually outperformed all expectations. In fact, the volume as well as the sales guidance has been more than 50% has been reached within the second quarter of FY19. Revenues up almost 20% on a year-on-year basis. Profits have jumped up almost 12.5%, and if you're talking about the margins, again 140 basis point jump as far as Prestige Estates is concerned.
Okay, watch out for Prestige Estates. That's exactly what the management had to say. After everything, 1%. Meantime, what's going on with Tata Global Beverages? Pranay, walk us through the numbers.
The numbers aren't inspiring. As you can see, very tepid growth on the top line. Profit also rather flattish. Margins have come off. This was not expected. It was expected that there will be a modest improvement in the numbers year on year, and therefore the stock is weak in trade today. It did try to move up yesterday in trade and closed up about 3%, but all of those gains have been given off today.
All right, that's a stock to keep on your radar, down in trade as we speak. Another one, and it's another result candidate as well, is 1% that you should flag off in trade. That stock too is having a pretty rough run, down about 3% as we speak. In terms of the performance, it's not been all that bad actually, barring the PAT performance, which has been lower by about 6% at 8.4 crore rupees. The top line growth has been fairly healthy, 38% higher at 174 crore rupees. They've also delivered a strong operational performance. The EBITDA has come in at 28.5 crores. That's higher by about 32.5%. But 88, that's where 1% is. Well, let's move on then and flag off Just Dial yet again, down 1% in trade, Siddharth.
Well, again, you have to look what happened in Just Dial last trading session. Fabulous set of numbers, huge pile-up of long position. And today, again, we are seeing very high built-up in future segment. But only because if price is down by 1%, you should not start talking that this is short positions which are getting built up. You have to, see the data which has panned out in previous trading session also. Also, it's taking, support or, trading around, I would say, rather than support. It's 200 DMA. So this data, despite, price action is slight negative, should be read as positive data point.
All right, there you have it. That's the take coming in on Just Dial. Let's move on then, Kunal, and discuss UPL. Take us through where the stock could potentially be headed from the 650 level, and more importantly, is now a good time to dip in?
Absolutely, Avan, and it's a classic double bottom kind of a chart pattern on the daily time frame. 650 was the breakout of this pattern. The stock is trading already above it. Also at 655 was the current market price. The stock has broken the 50 DMA after quite some time, and both these patterns sort of indicate that the stock should restart a new uptrend for itself. I would suggest a buy on UPL at current levels. 700 could be an approximate target. Stop loss at around 630.
All right, keep in mind those are some of the important levels to watch out for on UPL. Can look to even enter the counter right now. Let's Vivek, have you walk us through Philips Carbon. What's going on?
Well, spectacular set of results from Philips Carbon. The analyst community was actually expecting a reasonably weak set of numbers, but the company has managed to outperform expectations. We're talking about the revenues. Revenues have jumped up almost 280 crores on a year-on-year basis, albeit on a lower base. We're talking about the profitability has more than doubled again on a year-on-year basis. In addition to that, the company has also announced a lot of capacity additions, keeping the future growth quite robust as well.
All right, yes indeed, it's been a spectacular set of numbers and investors are duly rewarding the stock, 3% higher. Let's move on and let's talk about Coal India. It's one of the top drags, but the OFS is the big news, Pranay.
Yes, 3% is the stake that the government is looking to offload, and if it manages to do that successfully, then the green shoe option increases it by another 3%. And therefore, though the price is said to be about 266, the offer price, which is where the stock is currently trading, it's low by 3% from yesterday.
All right, there you have it. That's the take coming in on Coal India. Let's shift gears then and pull up Tech Mahindra for you as well. That counter did come out with their earnings, and in fact, the second quarter show was largely in line with what the street was expecting. They clocked in a healthy deal win to the tune of about 550 crore rupees, but brokerages as well are reacting to the numbers. And you have Macquarie, which has got the stock on the radar. They've upgraded the stock to an overweight with a target price at 830. CLSA as well has upgraded the stock to outperform 790 on Tech Mahindra as the target price that they have placed. Holding out quite smartly, one of the outperformers from the IT pack today at 731. Moving right on then, let's pull up HDFC Bank and a steady name that's not so steady in trade today, Siddharth.
Not a good news for investors and traders. This is very important stock when it comes to market and very, very important stock when it comes to Bank Nifty. Highest weightage in Bank Nifty. It has breached its support zone of 1900, 1920. And this has happened after quite some time that HDFC Bank is breaching some of its key support zone. At the same time, if you look at futures open interest, 11% rise in OI. If you look at what is happening in liquidity front, FIs are selling and DIs are buying. but DIs are buying more on the defensive names. That's the reason you're seeing Nifty IT going up. So HDFC Bank, breaching this important support level is not just bad news for stock, but also not a great news for market at large.
Okay, it certainly isn't. 1.5% down for the stock in trade. Tell you what, let's take a quick break. Come right back. We'll focus in on a whole host of other stocks to watch out for in trade. Welcome back. This is Market Fatafat. There you have it, our entire team standing by, and we're going to run you through all the stocks to watch out for in trade. Let's get in some technical trends going, and Gaurav would like to get in your views on Jubilant Food. Where do you see the stock headed?
Yeah, Jubilant Food is basically in a downtrend from short-term as well as medium-term perspective. On the way down, the stock is developing an impulse structure, which indicates the stock has significant downside potential going ahead. Even the momentum indicators on various time frames are in line with the wave structure. So I'm expecting this stock to test its recent low of 977, and if bears manage to breach that crucial swing low, then the stock can even tumble down to 900 over medium term.
Okay, those are the levels. The stock could potentially retest those lows of 977, so the downside could potentially continue. Vivek, Muthoot Finance, why is it in the news today?
Well, very interesting. The company is actually acquiring another smaller firm called Muthoot Money. Now, remember, this is an NBFC ND, and what they're actually doing is they're putting in an investment of almost 110 crore rupees. Very interesting, given the kind of crunch, liquidity crunch that the entire NBFC space is going through. Very interesting acquisition made by Muthoot Finance.
All right, that's clearly why the stock is in focus today. Tempered off as we speak. Meantime, it's clearly Bank of Baroda that is reacting to earnings, Pranay.
Yes, Avan, the stock had opened very well to the numbers. NII had come in just a shade under 4,500 crore rupees. Profitability also, we had seen an improvement of more than 20% year on year. Gross NPAs have also improved 100 basis points down from last quarter. Slippages at 2,280 crore, also lower than anticipated. The bank also updated that they have a provision of 240 crores against IL&FS. Net, the view was positive. The commentary is towards improving asset quality, and hence the stock is trading in positive today despite the weakness in the rupee.
All right, that's something to monitor. That's Bank of Baroda in trade for you. Meantime, let's move on to another set of earnings, and that is Jindal Stainless. In fact, the company posted a 91.5 crore rupee net profit last year, but this time around it's seen a 32% drop to about 61 crore rupees. The total income as well has fallen to 2,253 crore rupees. The expenses have come in at 2,152 crore rupees, and clearly the stock is under pressure. That's 300. That is a 3% downtick, just sub the 100 mark. Meantime, let's focus in on Midcap IT, and Siddharth, it's Mindtree, which is having a whale of a time today.
Well, I'm repeating the stock from yesterday's session, the observations. Now, yesterday we were commenting that how the stock is consolidating and there is huge pile-up of positions. And let's not give it, any color, whether it's long or short, but seems to be accumulation of long. And today we are seeing the follow-up price action, 6% rise in price. Open interest activity is not that very high, and that's the reason probably it's not among the top open interest gainer. 3 to 4% rise in open interest, but nevertheless these are fresh formation of long position. Yesterday too, whatever positions were formed were long, and you are seeing reaction in Mindtree. But this is in line with Nifty IT, Avan, because Nifty IT is the top sectoral gainer in today's trading session.
All right, that's something to watch out for in trade. But let's move on then. And Axis Bank, what kind of a pattern are we seeing today, Kunal?
The first private sector banks, if I can speak so, which recovered today from its initial losses. Now, in the process of recovery, it's confirming a bounce or a support at the 200 DMA for quite some time now. In the process also of this bounce, it's formed a bullish flag pattern across the last 3 or 4 days on the hourly chart. So, coupled with all those reasons, I believe Axis Bank can inch up high from current level. 600 to 620 could be a near-term target range for the stock price.
All right, watch out for that stock at 561. Moving right on to another mid-cap name, and Vivek, it's been an okay set of numbers for Pidilite. We just spoke to the management.
Well, that's right. So what the street was actually anticipating was that the company would be able to protect its margins. But given the fact that the profits have gone down almost 9%, missing analyst estimates, and the kind of margin erosion or the margin contraction that you're seeing on a year-on-year basis, and also hampered by the fact that competitive intensity is now increasing as far as the entire Fevicol brands are concerned. This is something that's keeping analysts quite subdued, and which is why you've seen a lot of target price cuts coming in as far as Pidilite is concerned.
Okay, yes, indeed, that's something to keep on the radar. But from one set of earnings to another, and one that has absolutely done a phenomenal job, and that is Cummins. Pranay, walk us through the financial details.
The revenues have jumped up about 29%, profits are up 38%, and you're seeing this come on the back of operating leverage, where margins have expanded about 230 basis points, now at 16.9%. Very strong numbers. Actually, the stock shot up in trade yesterday in the latter half, and after holding on to those gains, opened gap up and is maintaining the levels that we've seen from the opening. So clearly, strong hands there in the stock right now.
Oh, for sure. Brokerages as well are very pleased. It's a mighty response to those numbers, 12% and counting on Cummins India. Moving on then, let's pull up Imami in trade for you, and it's not been the best of quarters. The erratic monsoon, the delay in the arrival of winter, that really seems to have affected the volume growth, and that of course has affected the overall revenues and profitability. A 16% decline in profits at about 82 crore rupees. You also have the top line growth, which has come in lower. Macquarie has maintained a neutral stance on the stock with a target at 430, which they slashed from an earlier 590. Well, from consumption to autos then, and let's pull up a Bajaj Auto, which is 2% down in trade, Siddharth.
Well, you're seeing a stray bounce back in two-wheeler names, and especially Bajaj Auto, but those bounce back are getting sold into Avan, and that's the reason. If you look at the 2 months price movement, then there is lower top, lower bottom formation on Bajaj Auto, which has negative implication, and that's the reason I've shortlisted the stock in Fatafat session.
Okay, that's what you should keep an eye out on. Bajaj Auto, high volumes being seen in the futures segment. Gaurav, we started off with Pharma. Let's continue with that trend midway through the show. Walk hard, and can't help but flag that off. You're seeing some interesting moves. Is it here to stay? Gaurav, is my voice reaching you? Okay, anyway, the observation, okay.
We have seen a sharp reversal recently from Delhi lower Bollinger Band. Yeah, the stock has recently seen a sharp reversal from Delhi lower Bollinger Band. Even the positive divergence in Delhi momentum indicator added to the weight of evidence in favor of the bulls. So I'm expecting this stock to continue to climb higher. And on the higher side, the junction of 40-day exponential moving average and Delhi upper Bollinger Band, which is around 535, 540, that will be the key area to watch out for. And if that gets taken out, then the stock will turn bullish even from medium-term perspective. And in that case, the stock can climb to the levels of 600.
All right, that's what you need to keep an eye out on. Walkout can continue to clearly climb from these levels. Meantime, what's it been like for Blue Star? What was the quarter like? Vivek, take us through the details.
Well, Blue Star, if we're talking about Blue Star, given the fact that we were off on a lower base, revenues have jumped up quite significantly, in fact up almost threefold. But don't look too closely at the revenue figure, given the fact that market was actually waiting for pricing power to come in, and the other thing the market was looking for was the company to actually go ahead and protect its margins, both of which markets are not clearly happy with the kind of margin protection that the company has been able to do, and which is why you're actually seeing the kind of sell-off in the stock today. In fact, a couple of ETS cuts too have come in as far as the brokerage community is concerned.
All right, watch out for Blue Star, 1.5% down in trade. That's all the time we have then right here on Market Fatafat. Thanks for watching. Stay tuned for Markets at Night.